Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. John, we got a lot to talk about today. It's going to be a good one. I'm looking at supply ticking up ever so slightly, 5,072. Show me that chart.
I mean, ever so slightly is right, Noah. We're up not even 1%, but that bottom looks like it is formed, and the uptrend is still emerging here in supply.
Yeah, ever so slightly. We need that to change, and hopefully buyers are waiting for that to change real quick. We'll see what happens. Let's go to pending sales, 4,073. It looks like it's ticking down, but just a tad. Johnny, show me that chart.
It's ticking down, but that rate of downward trend seems like it's starting to slow. And as we're going to see in the weeklies, we're going to start seeing some acceleration there. So we could be seeing the bottom in pending sales soon here.
Yeah, and that would be a little early. I mean, I think buyers were hoping that would just keep falling a little bit more until later in the season, but that's not the case. I'm looking at the market pulse. It is still falling. That's a 0.8. We will see if we can get into the 7 handles and see how far that goes. But in the meantime, let's go check those weeklies, Johnny. I'm looking at supply, 374 things. Ooh, that's down. That's down, Johnny. Show me the chart.
It's down, but it's down by like 15 units or so from the week before. So it's not a terribly big number, but yeah, you're right. It's down. It'd be nice to see supply ticking up, especially as we're anticipating contract signs ticking up. But 374, really, I'll take it for early February.
Yeah, I hear you. I'll give you a week here, but you know what? Just to make a note here, we need to see 550 or so on a weekly basis to get to the peak levels that we saw last summer, right? 550. So just to show you where we are off and where we need to go to, we're still far off that number. Let's take a look at the contract sign. Contract sign is ticking up. This market is just doing what it's doing. 283. Johnny, show me that chart.
Yeah, that's another 5% compared to last week. And so last week was roughly 270. We're up another, 13 or so units from that. So it's not a big gain, but it's a gain nonetheless. That's the third week or so in a row of gains we've seen. So when I talk about the pending sales seeing the bottom, I think this is why, because you're starting to see more and more contract signs roll in on a weekly basis.
Yeah, and I mean, again, what did we hit there? 420, 430 or so when we were peaking out last summer. So we're going over to the 300 level. It's just incredible to see how strong this market is at this time of the year. Let's see if anything's going to sustain itself. I mean, rates are going up, Johnny. Rates are going up. The Fed, they got an emergency Fed meeting on Monday. A lot of people on Wall Street think they're going to do a surprise hike, 25, 50 basis points, something like that. I will go to the 10-year Treasury yield really quick, Johnny. I usually don't do this, but we'll show you that the 10-year Treasury yield has been steadily rising. So this is something that people are talking about. How does this affect mortgage rates? How does this affect buyers? I am of the opinion that Manhattan, it always affects everyone. But Manhattan has been doing such a different thing. The forces of Manhattan are so different than the national market. I mean, we did not rise 40% like the market did. We fell, and then we recovered that discount. But rates are rising, and it's something that I think we should talk about right here, because now we take a look at price action. Price action is notably jumping right now, Johnny, in Manhattan real estate. Okay, we are popping. We are seeing a pop, and you can see it right here in the black line, which is going to be median price per square foot. And then you got that green line, which will be median sale prices for condos, resale condos only.
Yeah.
Resale condos. So we took out new development, right?
Mm-hmm.
And you are going to see a big pop. And when you look at that pop and you kind of draw the line across, it's like, well, wait a second. Are we at new record levels? Now, again, this is a monthly. Let's just show you guys what we're at here. This is a monthly look. So this is looking at November, right? So everyone that signed a contract in November, okay, that's what this signed a contract in November, they closed, Acris filed it. Here it is. We're giving it to you early, and everything's jumping up. This is not like everything's jumping up. So when you see this, Johnny, what are you thinking?
Well, it's really interesting, though, because you look at price per square foot and median price, they're both spiking up, and they are both, are they at record levels from what we're seeing here? I mean, these are November numbers. So they still could change a little bit, but they're up there. I think my median price at 1,600. I mean, this is in thousands. So that's 1.6 million for a median price. So I think that's some kind of a record. It would lead you to believe that this market is absolutely on fire. And I think you're seeing that on the demand side. But the demand side, I think, is more driven by supply shortages than it actually is by, people clamoring to chase prices. And I think what you're going to see is that if you look into this data a little bit more, it's not necessarily that prices are up across the board. They certainly are up from COVID lows, and they're probably up from where they were last year. But I don't think most things are really not at records at this point.
Right. And if you think about, I would agree with that. Okay. And if you think about what comprises this data, right? We all know that the new development market and the luxury sector has been doing quite well.
Yeah.
They ended last year doing quite well. And now we're looking at data at the end of Q4 of last year, right? November, December timeframe. And we're analyzing it and trying to look at today's market for some idea of price action. And when I break down this data, say, all right, let me just look at this data and see what percentage of these sales are luxury sales, right? Luxury sales over the 4 million. Keep it simple. Is it high? Is it low? Maybe something is going on that is more than meets the eye here. And when I do that, okay, everything gets a little clearer. Okay. So what is powering price action right now is the fact that, look at this right here. This is the top. This is the jump in the percentage of luxury resale condo sales by contract sign date when we're measuring this to bridge the gap of these lagging closed sales trends. That is what is inside those numbers. So those numbers are going to be a higher representation of the luxury sector, more so than what we're used to seeing. And that tells me that this is not something that is a broad market thing. This is more something that's, all right, the luxury sector is now hot. We're now seeing some sales from it. Chances are higher that this is not going to sustain itself and this is going to go back down to more normal levels. And when that happens, you're going to see the price per square foot and the median sale price also drop down to more normal levels. So I would say that this is more of an outlier trend. And if I had to go back to the chart we're just at, that this is more of an outlier trend, and it's probably going to regress back down towards where it needs to be over the next 1 or 2 months. Now, I don't know if this is going to play out that way, but that's what the data leads me to believe, John.
Yeah, no, I think it's an excellent point. I mean, you go back to that percentage of the luxury sales. I mean, we're almost at double the numbers in November.
Yes.
And my guess is December is probably actually going to be slightly higher just because that's, the luxury market just was gangbusters toward the end of last year. But then if you flip back to that condo price per square foot chart, you do realize that when you think about things, a lot of the price action normally is driven by what's happening in the luxury market, and that kind of trickles down. So if you get a lot of sales there, it kind of pulls everything up. So we have, just thinking about the macro here, we've kind of crossed back into the price channel. We might bounce along the bottom of it, like you were saying, but I think that we've reestablished that uptrend, I should say.
Yeah, and I would agree with that. And that uptrend's going to have little downtrends along the way. And the reason it's going to have downtrends is because you have these little pops. And these little pops are now a function of what types of properties close and when. And now we're seeing that, there's a lot of luxury in there and it's closing now and we're seeing it now. So that is what's going on. I still think the broader market, is back to probably low to mid 2019 levels. That is going further, that is going up. And we're probably getting towards 2018 levels. And this chart tends to agree that's the general direction. So very interesting conversation. Thank you, Johnny, for pulling up all this data. That is John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, you guys got questions, we got answers. You can visit our forum right down there. If you want any of the reports we talked about today, they will be right over here in this section. Other than that, this has been your weekly Manhattan market update. We'll catch you next time.